Alright, welcome back to MMG. Let's do a market update. I will freestyle this one. First of all, consult your financial advisor before doing anything. Stocks, cryptos, extremely volatile, extremely risky. I'm not a licensed financial advisor. This is more of an educational channel and just listening to me give you guys my opinions. And do not invest in anything you're not willing to lose or lose sleep over. First, I'm going to cover some news. There's a lot of news, like usual, or big news, or whatever. The news cycle, most of it's overblown. You could ignore probably a lot of it. It's just going to raise your cortisol levels, guys. Don't take it too seriously. Alright, so let's talk about some things. First of all, Trump, I guess the House passed impeachment, right? I'm still not, I wouldn't worry about it. The Senate still has to, vote on that, and that's a right majority part of the legislative branch there. Now, also 1.4 trillion spending bill was passed. That's with a T, trillion. So for defense mainly. Trump's gonna get his wall and blah blah blah. So that was passed. When they get together and they actually pass laws and do things, and the debt ceiling was also raised. By the way, nobody even talks about the debt ceiling anymore because it's just expected for them to raise it before there's a shutdown. The reason there was ever a ceiling was to prevent from them spending beyond their means. But since when do they obey constitutional laws? Trump tweets. Posted this in the newsroom. I'm not going to bring it up. It's in the newsroom. He said something on the level of, yesterday, the Fed needs to lower interest rates to 0 and literally start QE. It's ridiculous. But at this point, it's just keep it going. Keep the music playing. The boomers get mad because the younger generations say things like, okay, boomer. Well, they're in their generation. They're just keeping this going until they want to keep it going until they're gone, right? And that goes for politicians as well. Like they just want to keep the music playing while they're in office. Once they're out and retired, whatever. But honestly, I mean, all of this is about passing on the torch to someone else before the torch burns out. That's how I view it. And that's why the younger generations are mad, because our futures are essentially have been spent already. So there's going to be more age demographic divide as well. Just prepare for that if you're older or young. What else? So yeah, the spending bill. I'm not even gonna get into it. They're just gonna endlessly spend. So headline: It's nuts. The Fed has created a monstrous beast of overinflated valuation. Yeah, I've been saying that for quite some time. We know. Another I believe CIO Peter Toogood explained that this is nothing to do with fundamentals anymore. Fill your boots, why not? So this is indicative of just everyone capitulating and just saying, just throwing their hands up and saying it's time to just keep buying and buying the markets are going to go up forever. This time's different, right? I mean, we're in the euphoric stage. We really are. Before we hit the top. I'm going to do TA. I know the markets didn't sell off today, but just wait till tomorrow or the end of this week. So yeah, I mean, even on mainstream media, they're starting to bring on people, and they're looking at things. I mean, earnings don't matter anymore. Like, who cares? Just keep buying stocks. Liquidity is just getting pumped into the market via repo, not QE, and that's probably one of the main factors why the market's going higher and higher, no matter what. So, for example, the news broke today that that the House passed impeachment. Right, the market didn't even dip, nothing. It actually went higher. So bad news is good news. Any news is good news. Fundamentals, just buy, keep buying. Bad fundamentals, nothing matters anymore. Here's another quote. This is not reality. The world was slowing down long before this trade deal became the biggest issue. Oh yeah, the trade deal, right? Still, guys, the trade deal. It's not that big of a deal. Nothing was really. You could argue that the trade was better before the deal, before the trade war and whatnot. And China still they just came out with some statement that that we will talk about phase 2 much later in the year, and they haven't finalized phase 1, whatever. Yeah, and Too Good said, then took an aim at the phase 1 trade deal with China that doesn't actually mean anything, and warned that the next year will be full of phase 2 talks are going well, jawboning. Right, and Trump's gonna say it's gonna be never ending. So the market's gonna the algo bots are just gonna keep buying into 2020. That's what they want. I'm not saying that's gonna happen, but that's what they want. That they could jawbone the market higher, and the algos on every tweet's gonna just buy, buy, buy. What this does is it's gonna go up on lower liquidity, because eventually everyone's all in. I mean, where's all this money going to come from? Even with capital flight from emerging markets, at some point, it's a bit, it's beyond overvalued. And if everyone is just buying on the fact that everyone's buying and the market keeps going higher no matter what, it doesn't take much. It really doesn't for the market to reverse. And you know, markets take the stairs up and they take the elevator down. So anything could happen globally, and it could trigger the market to sell off. And when it does, it's going to be brutal. So the next pullback and correction, I'm not saying crash or anything. I'm saying the next correction or pullback is probably going to be very swift, very fast, and significant. Pretty much like around this time last year. I expect something like that to happen soon, within the first quarter of 2020, if it doesn't start like tomorrow. All right, it's what I've been saying in my videos for the past few weeks now. So yeah, I mean, it's at the point where it's very obvious for everyone what's going on here. And once everyone's on one side of the trade, and everyone's capitulated, even the bears, and they keep buying stocks, and it's euphoric levels, nothing could go wrong, that's when something goes wrong and everyone gets blindsided, right? And then everyone tries to exit, except it's like a theater, right? It's just one small exit, and not everyone could get out all at once. And that's why the market drops so quickly, because there's no buyers, only sellers. And then the PPT comes in, plunge protection, right? and they'll try to put a bottom into it, and then the Fed has to come out, lower rates, and you guys know the story. All right, so FedEx. First of all, when I was young, when I was in college, my freshman, maybe even into my sophomore year, I worked at FedEx. I filled those semi trailers. Man, was that FedEx is some serious work for package handlers. I would fill like 6 of those a night, a shift. I was ripped, and you fill those trailers from bottom to top like it's a giant Tetris game. It's really crazy. And there's these giant sorters and huge chutes that come down into the trailers. Very tough job, and it's cold in the winter. Huge warehouses, and I did many things there except drive. I just worked in the warehouse. That was a very labor intensive job. Probably one of the most labor intensive jobs you could still get these days in this modern world of people sitting in office cubicles and breathing in each other's uh, exhaust fumes. By the way, the air quality in like office buildings is it's like equivalent to smoking a pack a day or something. I heard. I don't know. You guys could look that up. So China was flat. Europe was mixed once again, with Germany the biggest laggard. What else? The Dow and S&P closed red, breaking their win streak. Yeah, the indices have been on a 6-day win streak. They've been going up for 6 days, making new highs. Transportations were crushed because of FedEx. So FedEx, right? Transportations. You would think FedEx is doing great. It's the holiday season, right? And if the economy is strengthening, it's a fact that you see more rail carts, like the trains, and more semis transporting goods. Because when the times are good, people are buying things, right? And there's business, and the economy's turning and flowing. It's not just people are buying things are getting built. Businesses need more office equipment or what have you, or machines, and freight is up, right? The volume of freight, so revenues and turnover and all that. So why is it down? It's been. I'll look at the transports. I mean, here's the transports chart, right? Where is it? I can't find it. That is weird. I had it up. Oh, here we go. So here's the weekly on the transports. They've been waning for since December of 2017. So ever since December of 2017, it didn't quite put in the peak, but transports has lost momentum. The peak was September of 2018. And ever since then, it's been trading sideways pretty much. Once transports falls below 10,200, I don't think the market can ignore it. Now, transports does sort of go up with the indices, and that's ridiculous. It shouldn't, but it drags it. But eventually, if this dislocates, right, and there's divergence, and transports falls, why the markets keep going higher? I mean, more and more Wall Street's gonna notice stuff like that in hedge funds, right? What's next? Cracks in the bull market armor. So let's take a look at this chart. Right, I've been talking about this and posting in the newsroom charts and on my social media platforms. Um, what was it? The Dow and the S&P it's up over 16% since the last low. And we'll look at the charts in a second. I also posted that the S&P's up almost 400% since the 2009 low, which is insane. I mean, for an indice, for the broad index to be up 400% in less than, what, 12 years? Might be a bubble. Just saying, that's never happened in human history, where unless you look at, tulip bulbs or whatever. So or the Indian company, right? The Western, the British, or no, was that the German? That was the British. Yeah. The first company ever made, and then they issued shares. I'm pretty sure that was in Germany. I may be wrong. I just watched a documentary on it. Anyways, no, that was. It doesn't matter. So, anyways, that was the first big bubble, or maybe it was tulips. I don't know. It was a long time ago. So we're looking over here. Fed rate hikes spur sell-off. Fed reverses by lowering rates in QE. This red line right here when the market dumped at the end of 2018. Now remember, the Fed was raising rates all of 2018. Then finally the market cracked, and we had a 20% correction, and that's when the Fed capitulated. And now we're melting up and going higher and higher, especially with these not QE repo operations. So now, if you look back right before the financial crisis, there was a 19% correction and sell-off before the final crash back in 2008-9. So back in 2008, or the end of 2007, there was a 19% correction. So it was becoming volatile. And then we had the financial crisis, which is very eerie of the current time, right? We had a 21.3%, it wasn't even 20, correction. And now we're just going higher and higher. And soon, right? All right, so what else? Over here we have Fed balance sheet and asset prices. The orange line is the Fed's balance sheet, and then the S&P 500 stock index. Look at this. Here's the balance sheet of the Fed. When it was dropping, it created a lot of volatility, and then finally that 21% correction. And then they started lowering interest rates. It got the market to rebound. And as it was going higher and it was volatile here, all of a sudden the repos came into play. And now it's just shooting straight up. Somewhat parabolic. I wouldn't say parabolic just yet, the S&P or any of them, but it's getting close. And you can see right here, global QE. This is global, so it's not just the U.S. It's globally. It's it's happening. And there's some more interesting charts I need to show you guys. The U.S. stock market hasn't been this rich and overbought since 1933. The greed, the extreme fear and extreme greed index is at 85. 100 obviously is as greedy as you could get. We're at 85 right now. So if you're see, I am a what you may call it. I take the opposite of the masses, right? I am a contrarian. So if you're a contrarian, you like looking at the extreme fear and greed index, right? I mean, it's very simple. When there's extreme fear, it's oversold. When there's extreme greed, it's overbought. It's that simple. So the RSI, I mean, it's a little bit, it's up in the 70s, so it's pretty obvious. I mean, I look at these things all the time. This is nothing really worth showing. What's the next article? U.S. official gold reserves. I'll talk about this in a little bit. Let me show you guys a few more charts. So this is the ratio of total market cap to U.S. GDP. So the total market cap, total, to the economy. And both are, a little skewed, especially the GDP. But as of right now, we are at 150% of GDP, the market cap, according to this ratio. The last time we were near, we didn't even reach, so this is all-time high, by the way, this ratio hitting. The last time we were up around 150% was in 2000 when the NASDAQ bubble popped. Except for this time around, this isn't just a tech bubble, it's an everything bubble. That's why this is going to be really bad. All right, this chart is fascinating, right? So the repurchase agreements, which is the repo, right? And this is a weekly chart, I believe. So in 2000 to 2002, NASDAQ bubble popped, right? And we had a mini recession. The repos spiked in 2000 or 1999, right before the NASDAQ bubble popped. For the financial crisis back in 2008-9, check out repos. Spiked. And then, and this is, I believe it's Fed intervention as well. But look at this. Look at this comparison compared to the previous spikes. So, using this as an indicator, what does this tell you? I mean, this is a huge red flag. It's pretty much like the yield curve inverting, which it did invert a few months ago. Everyone seemed to forget. But, when the yield curve inverts, you have like 6 to 18 months, something like that, before the next recession. And, the yield curve already inverted. And everyone's already forgotten. And now everyone thinks the stock market's unstoppable. And no matter what happens, just keep buying, right? But look at this. Just the spike in repos, just the size of the spike, means something big's coming, right? Recession-wise. So, history doesn't repeat, but it does rhyme. So, another thing I want to talk about. So Trump has tweeted in the past that if he gets impeached, the stock market will crash. Now, I don't think he is going to. I think he's going to win. And I used to say no, I don't think he is because the market's going to dump and blah. No, they're going to keep it up. Well, we could have a huge correction in the stock market, right? A huge, maybe a 40% or something drop within like 6 months or so, who knows. But that doesn't mean he won't get reelected. He's probably is because there's no other candidate who could take him, in my opinion. And I don't think the public is going to risk their financial livelihood on one of the lefties because he is right. If he does, get thrown out or he just doesn't win for re-election, more than likely that's it. Like it's over. The market's just gonna price that in and it's gonna drop like an anchor. So because listen, I mean, Wall Street, they love him and they know if a lefty gets in, that's not mainstream and is more radical, right, towards the left. They know there's going to be massive tax increases, everything that's just negative for the economy. And if that doesn't put a top in, I don't know what, it'll scare Wall Street essentially. But what I'm trying to say is he's already tweeted about this a bunch of times, and he's gonna do this. So if there's a correction, a 20% correction, or another major correction in the stock market in 2020, he's gonna blame it on the impeachment now, and that just guarantees him re-election, because everyone's gonna think, oh yeah, well, he's right. We can't afford to not re-elect him now because our pocketbooks, right, or our retirement funds and everything. And then on top of that, it's a good scapegoat. That and the Fed. So he actually has all the scapegoats. So I'm fairly confident we're gonna get another 5 years from today, I guess. So that's my opinion on that. I've changed it, and I can change my mind as things develop, as things change in the world, right? If you don't change with the world, you'll get left behind. It's that simple. People don't seem to understand that. By the way, I'm not a broken record like a lot of other people on the tube here. And you guys need to respect that. I don't keep saying the same thing over and over and over like most other people. It's like they can't think for themselves. Yeah, so let's get into some price and TA here. Here's my market watch screen. S&P. This is the Dow, the dollar, the VIX. The VIX has hit that bottom. It's hit the bottom again. What's the VIX? Volatility index. Every time the VIX hits the bottom here, it's a good indication it's going to spike again, right? So it's pretty much hit the bottom. What else? Here's the dollar. Now this is interesting. Now I just did the dollar milkshake video. You should watch that if you haven't. It's pretty good. It's one of my good ones, I think. Feedback was good on it, at least. Well, the dollar is still hanging in there. And this is a weekly chart of the dollar. Every candlestick's a week. I still think it could revisit the 200-week moving average for the short term for now. Because, again, Trump just tweeted needs a weaker dollar. And that's for exports and imports. And he also said inflation's not that bad. So we could have a weaker dollar to compete with the rest of the world in their almost negative interest rates, if not negative, and just endless printing. Like the rest of the world right now is worse maybe than the U.S. Printing wise. Yeah, they're not printing as much in value, but compared to their size of their country and GDP or economy, right? Like China and Japan. Dollar right now. This is a daily chart now of the dollar. Every candlestick represents a day. The dollar broke below the 200-day moving average, which is a big deal. And if it can't get back above it soon, like by the end of this week, I think it's going to go down for the count, which is positive for metals, right? Well, not down for the count. I mean, if we go back to the weekly, the next major support will be around the 95 handle. Pretty much. So for the short term, for the next few months, I expect 95 on the dollar index. So the dollar versus foreign currencies. And that should be very, very positive for metals. What else? Let's take a look at the US 10-year yield before I look at the S&P. This is a weekly chart. There's a good inverse correlation between gold 10-year. Gold is the orange. Light blue is the 10. So the 10-year is really trying to break out higher. And I don't think it's going to, because the Fed's not going to let it. And I have a feeling the Fed's going to cut rates, or they need a reason to cut rates. Right now, they don't really have one. I mean, the economic data is just slightly getting worse with time, but everyone seems to ignore that, even the Fed. Which is, this is like the world we live in. It's very it just doesn't make sense, right? That's how you know we're near the top if we're not at it right now, literally. So, and I'm not saying, just wait till I get to that S&P. I think the 10-year is they're gonna push it down one way or another for a little bit to get back to the 1.45%. They need to do that to keep the markets from selling off and having a huge correction, right? Because if the 10-year gets back above the 2%, that's going to start popping bubbles. So they're going to push it down. If they don't, and the 10-year all of a sudden just spikes and goes much higher. By the way, that's what caused the repo market to blow up. By the way, if you remember my repo video, that's gonna pop the everything bubble, in my opinion. If it shoots up, now maybe they could handle it if it doesn't get above let's zoom out here, get a good idea. If the 10-year yield gets above 3, I think that'll pop the bubble. Until then, it could rise, but it's gonna make Wall Street real shaky, and you're gonna see the market sell off. So the Fed's gonna do something. They're gonna get the 10-year back down. Well, they'll try to. They have to try to, but again, remember that the bond market is a free market, and any Fed intervention, right, is fought against the real market. The real market wants high interest rates on bonds and treasuries, right? But the Fed keeps artificially pushing it down, including the 10-year, as they push down the short end of the yield. The longer gets dragged down with it, which is if the 3-month and the 1-year and the 3-year, if they could push that down, that should pull down the 10-year, right? Either way, so if the 10-year spikes above 3%, then gold takes off to the moon. If the 10-year slowly goes up to 2.6, then gold's going to keep selling off. If the 10-year drops again, gold's going to take off. Not to the moon, it's just going to possibly make a new high. Obviously, this year is almost over, but a new high for, higher than 1560 or wherever that high was. All right, let's get to some other charts. So before I talk about the S&P, let's take a look at the NASDAQ. The NASDAQ right now, the daily yesterday was a 9 sell. Today, well, the market's already closed. So right after the 9 sell, look at this red candle. So these, by the way, the TD, I mean, it's accurate to about 60 to 70% in my opinion, but not always. Like you see a sell right here and it didn't sell off. But here's why I think it, the NASDAQ and the rest of the indices are going to sell off. The channel, the top range of this channel, it broke out. So it needs to retest it, for one. And for two, it could be a false breakout, which I think it is. And it can't get too high too quick once it breaks above the channel. It needs to pull back and retest it and then go higher if it's going to keep if it's breaking out of the channel, period, which is the bullish case scenario, right? So plus the moving averages are, look at the gap between them. It's the spread. It's widening. Once it gets too wide, they need to come and consolidate again, right? Just looking at moving averages. Here's the financials. They've gone like straight up for the past few weeks and months. So what I'm trying to say is they're gonna lose momentum. This can't just keep going. This is the Russell 2000. Check this out. The weekly has a sell 9. Let's take it to the daily. The daily also has a sell 9 for the Russell 2000. So when the Russell falls, a lot of smart investors, everyone watches the Russell because that's a great barometer of the U.S. economy, right? Because it's 2,000 like mid-cap size companies. Let's take a look at the FANGs. FANGs are just rocketing higher, trying to make a new all-time high. I feel like the FANGs and the S&P is what's dragging everything higher, despite the fact everything else wants to pull back and correct, a healthy correction, because this momentum, it's really unsustainable, and it will create a blow off top if it just keeps going and going. And there was a 9 sell last week. What about the daily? Let's take a look at the daily for the Russell. Or no, this is the FANGs. So there is a 9 sell as well on the daily for the FANGs. So everything is very lined up for a nice correction now. Here's the Dow transports. We looked at that. Natural gas. So in my last video, I forgot what stock I was trying to talk. One of the first stocks I really started looking at and investing in, like back in like 2008, was Chesapeake, right? Natural gas, that bubble has pretty much popped for the shale industry. It's currently in this giant wedge, or no, triangle, and if you zoom out, see right here. Look at this. This is nuts. Or maybe it was back in like 2006 or 7 when I first started. I don't know. But that was the... No, it was during this time. Look at this. A lot of speculators love trading nat gas. It might break up to the upside, but that means the industry has to recover some way or somehow. Here's Tesla. So Tesla was looking great for a short, but did not work out. It just shot straight up for the past 3 days. Either way, it's going to pull back with the rest of the market. And hopefully, if we get a nice correction in the last weeks, maybe a month or two, during that time, Tesla will pull back with the rest of the market, right? And if some bad news comes out, that would be even greater. By the way, some Tesla like drove through a store or something on autopilot, I think. I don't know. Look into it. All right, here's gold and silver. Weekly charts. The weeklies still look positive. Still buy signal. It's been consolidating now for quite some time, like 3 months or maybe more. And I've been holding on and accumulating this entire time, even with leverage ETFs. And it's fine. I'm waiting for the market to correct. And that will trigger gold and silver. Why? Because when the market corrects, the Fed's going to lower interest rates again. And every time the market pulls back or corrects, people get really nervous because everyone has eyes. And when they look at the market, they know it's the longest running one and it's starting to look a little parabolic. All right. I mean, this is the S&P 500 6-month time frame. So every candlestick represents 6 months. We have a 9 sell on this 6-month candle. Okay. Let's go to a 1 month. It's a 7. Hold on, that was a 31 day. Let's go to a... Yeah, I like that better. So it's on a 7 count for the 1 month. But that, it doesn't always sell off on the 9. But technically, the 1 month says possibly 2 more months of upside. Here's the thing. I don't think that's going to happen. Can it? Sure. Let's go to a... No, let's go to a weekly here. The weekly, this is why. The weekly is on a 9 sell right now. This week is on a 9 sell. And by the way, the oscillators are all like pegged to the ceiling. It's all overextended. Momentum over... It's going to lose momentum, that's the thing. And all the oscillators and volume is just... It's pegged to the ceiling. Like, it's way overvalued. Or overextended, not valued. Let's take a look at the 3-day. 3 days on a 4 count. Let's take a look at the 1 day. The 1 day is also on a 9 sell for the S&P. So the weekly, the combination of the weekly and the 1 day and the 6 month is enough evident. Well, it's enough for me to possibly say that the top, the all-time high forever and ever was yesterday. What are the odds of that? I don't know. I'll give it a 50% chance. Because here's the thing. The market could have a huge correction. And then they're going to open the MMT floodgates, which is modern monetary theory, and start throwing helicopter money onto everyone. Like, not only are the banks going to get bailed out, but so is everyone. Like, they're going to just send checks to all Americans. They actually did that back in 2008 and 9. Like, you got a check. It was a small check, but this time around it'll be a huge check. And that might shoot up the market like Venezuela style. But first, that would be after a huge correction or crash, right? So I don't want to say that this is the all-time high. But I would not be surprised if it is for this year and 2020. So yesterday could have been the all-time high. Or no, it's actually technically today. No, today, yeah. Hold on. It's hard to see on the daily. Yeah, today. Today, technically, could have been the all-time high. Or close to it. So today might be it. There's a probability. I give it like a 50%. Alright? Now, what comes in the next few years, I don't know. Because I don't know if they could reinflate the bubble. And is it possible? I don't know. That's the thing. But I'm just saying this might be it. Like today. It's all over. It's the daily here. It's overextended as well. So now let me zoom out. Let me show you guys how parabolic this is really starting to look. Look at that. It's ridiculous. This is a weekly chart. This is 2009 back here. Something not seem right here? Like, does this not seem parabolic? Let's take it to a monthly. I know it's not logarithmic. I don't care. I think having it on normal here is more representative of this bubble. Look at that. Can it go a little higher? I guess it could go straight up a little bit longer, but not much longer. Look at that. Do I have to bring up the bubble chart, the Wall Street cheat sheet? You guys, I've shown you guys that so many times, so you guys have it memorized at this point. Either way, this is it's a bit stretched. Needless to say, it's a bit stretched to the upside here. Let's take a ruler and measure since 1971. How high has it gone? Just curious. It's from the all-time low in 1971, since Nixon took us off the gold standard. It's hard to see. It's about market since 1971. Jeez. It's gone up 4,700%. Although it's measured in dollar terms, so not really. Okay, that's why it's not Bitcoin. Because you have to adjust it for inflation, right? So it hasn't gone up really that much. Matter of fact, gold has gone up more in the past 2 decades than the entire indices in the stock market. People just don't know that because they've been indoctrinated. Stupid. Yeah, like gold has gone up. It was like what, like $200, $250 in 1990 alone. In 1971, I don't even know what the price was, but it was like probably really low. So, actually, I'm curious. You guys let's take a look at that. What was it back then? Curious. I don't know. I'm not that old. Zoom out. Look at that. Here's 1976. It was $92, below $100. Wow. So at the all-time high, you had a 20x, pretty much. A 20x return. If you just holding physical, I'm not even talking about like some mining stocks. Mining stocks, it's like, who knows, 20,000% return since the 70s, if that company survived and did great, right? Like, well, I don't want to name any. So, yeah. By the way, in the private group, I'm excited. I mean, we keep finding better and better, and we all work as a team. There's a lot of guys in there that are smart, and they find stocks that I can't look at everything. I'm just one person. I don't have all the time in the world. But they found some real good gems that we're pretty excited about. So let's take a look at gold here on the daily. Again, it's been consolidating. This is all consolidation. There's a cup and handle as well. Price usually breaks out and up out of a cup and handle. Sometimes it'll fake you out. It'll drop and then it'll break up. But usually the price, I'll give it like a 70% chance it'll go higher. And this cup and handle should shoot the price into major overhead resistance around 1500. If we test 1500 and then the market corrects and pulls back as I expect it to in the next few days or weeks, then it's a perfect storm for gold to shoot up to like 16 or 1700, somewhere up there, right? And if it does that, these mining stocks are seriously going to explode in price. And then hopefully maybe it'll run even more. I don't know. It'd be nice if we made an all-time high first quarter of 2020, because that'll get a lot of eyes on metals. Wall Street hasn't been paying attention at all. All right, guys. So I'm gonna leave it at that. Smash some likes. Leave anything in the comment section. Go to my website. 15% off. You have 2 weeks, and take advantage of that while it lasts. Because I'm probably not gonna give percentages off for a while after this. And leave in the comment section what you want me to cover. Till next time.